Today, Bitcoin briefly drops below $21,000. Australia wants to look at every cryptocurrency traded in the country so it can develop comprehensive regulation. And exclusive documents reveal FTX revenue soared during last year's crypto rally. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto prices in the red to kick off the week, although they're bouncing off the morning lows. By noon Eastern, Bitcoin fell to around $21,000, Ether dropped below $1,600, and Solana dipped to $34. Investors are focused once again on inflation, the possibility of a recession, and a whole bunch of Fed officials meeting in Jackson Hole, Wyoming to discuss the economy. All right, on to the top stories. First, FTX made big money during last year's crypto craze. CNBC's Kate Rooney took a look at the company's financials, and here's what she found.
This is a pretty rare look under the hood of FTX's finances. We got a copy of its audited numbers from last year, and the privately held crypto exchange brought in just over $1 billion in revenue for 2021. That was up more than 1,000% in a year. And as of the first quarter of this year, it was on pace for a similar run rate of about $1.1 billion. FTX was also profitable. Operating income was $272 million, up from just $14 million a year earlier, and operating margins were about 27%. Like others in the brokerage industry, the bulk of revenue comes from those trading fees, but it's much more indexed to some of the more sophisticated trades in crypto. Derivatives were by far the biggest revenue driver, with most of that action happening abroad. Less than 5% of revenue came from its U.S. subsidiary, and FTX has made a big push for that U.S. retail audience. You might remember the Larry David Super Bowl ad. It's also got a lot of celebrity partnerships with Tom Brady and Giselle, for example. According to the documents, it spent about 15% of revenue on marketing and ads and plans to spend almost $1 billion there in the next few years. We'll see if that number changes as crypto companies pull back on spending with prices down so significantly. The documents also give a sense of Sam Bankman-Fried's growing global footprint. The CEO owns FTX Trading, which now owns companies in Cyprus, Turkey, United Arab Emirates, all over the place. It also acquired companies in Switzerland and Australia recently, which may have also been to get certain regulatory licenses. Unclear how the company is holding up in the recent downturn. We don't have those Q2 numbers, but it last raised money at a $32 billion valuation. If you look at shares of Coinbase, it's the only real public comparison out there. That stock is down about 70% since January.
Okay, next up, Australia is ready to reform rules around crypto. The nation's treasury announced its plans to build regulations around something called token mapping. Regulators will examine each cryptocurrency traded in Australia to determine the best way to regulate the industry. The Treasury said the last Australian government prematurely regulated the sector without fully understanding what exactly it was regulating. This agency believes the new method will be more cautious. Last up, Voyager Digital's creditors want to block a payout to its employees. The bankrupt crypto brokerage wanted to pay retention awards for employees who stuck with the company, but its lenders filed a motion to stop those payouts from going through. In the filing, the creditors said, quote, "At a time when thousands of creditors struggle to pay personal expenses, the debtor now seeks to pay bonuses to their already well-compensated employees." Okay, for our main story of the day, let's talk a little bit more about markets. I spoke to Ben McMillan, founder and CIO of IDX Digital Assets, about the recent sell-off. He explains what it says about investor sentiment. So everyone on Wall Street is asking whether we're seeing a bear market rally in stocks or the start of another bull market. I want to get your perspective on that for the crypto market. There was a lot of optimism as we saw big gains in Ethereum and Bitcoin in the past month. Now we're seeing these declines. Are we seeing a bear market rally right now?
I mean, I think that's the growing consensus across risk assets. And, crypto's no different. The story this year, and it's not unchanged, is that macro is driving the crypto conversation. So, what's interesting is we've seen a lot of kind of very positive developments that are crypto specific. The idiosyncratic risk, so to speak, looks really good. We had, the news that, BlackRock is teaming up with Coinbase for institutional accounts. The market kind of shrugged that off. A year ago, that would have been big news. There would have been, a lot of excitement about that. But stuff like that is just kind of being, the overhang of macro concerns, is weighing down on crypto. And so I think, Friday we saw Germany come out with really bad inflation data. China did another surprise rate hike. The data coming out of China looks, worse than previously thought. And, I think investors are bracing for, the fact that there's going to be another leg down in risk markets and, crypto suffering as a result, despite the fact that there's some, good news.
So you mentioned some of the recent triggers, but what are the biggest risks to crypto right now? Is there anything besides inflation or recession risks?
Yeah, so I mean, other than just kind of the general risk-off sentiment, the risk with crypto is always it's kind of like the edge case asset. So particularly as we've seen institutional adoption increase, that means they're more likely to kind of pull risk assets out of crypto first, just in the same way that they were high multiple stocks. That aside, the merge is very good news. That provides a bit of a bid, but I think there's some concerns about regulatory risks. The latest sanctions, the OFAC against Tornado Cash, it's a relatively smaller protocol. But that sent a lot of concern across the crypto community. And our general sense is that, listen, this is a space that's been the Wild West for a long time. Generally, regulation isn't a bad thing. But, if the regulators come out and there's a turf war between something like the SEC and the CFTC, which, is a concern, that could weigh in the space for a while.
So we have Fed officials meeting in Jackson Hole this week. What does that mean for crypto? What kind of outcomes are we looking for out of those talks?
I mean, it's, consistent with kind of what Powell's talked about all year. I mean, this is a market that is hanging on his every word, basically, not just crypto, but risk assets in general. And so everybody's waiting for, 10 a.m. Eastern when he comes on and talks, in what he says. I think the expectation is he's probably going to skew a little more hawkish in his comments. There was a little bit of a back and forth once the market started pricing in kind of this early pivot. A lot of the Fed chairs came out and said, wait a second, we're going to stick to our guns, so to speak, as it relates to inflation. So I think crypto markets in particular have been very sensitive to that. And they're going to look for any signs that the Fed, might be more or less hawkish relative to kind of where the market is right now.
So you mentioned that pending regulation is also potentially moving crypto prices right now. What about the news out of the FDIC? They issued those 5 letters, including to FTX US, saying that these crypto companies were allegedly mischaracterizing their relationship with the FDIC, with the way that customer deposits were insured. How significant was that news?
Yeah, I mean, I think that's actually ultimately a good thing because, investors look to the FDIC as a stamp of approval. And, to the extent that there's false marketing or alleged false marketing to that, the FDIC is going to want to get in front of that. And that's good because they're going to preserve that credibility to, investors, not just institutional, but also the retail public. So I think that's the kind of enforcement actions that are good for the space. It kind of brings a groundswell of credibility around the FDIC. And more of that ultimately, I think, is going to help increase adoption among the general masses, particularly as it relates to stablecoins.
So where do you think the bottom is for prices of Bitcoin or Ether as they are right now? We had one guest on last week who said to expect a bottom of $18,000 for Bitcoin through the rest of the year. Do you agree with that?
I think that's technically speaking, that's probably not a bad level. That's where we started to see a groundswell of kind of conviction buying last time around. The joke is crypto can always trade down. There's always a 10 or 20% down move lurking. Our own risk models have started, ratcheting risk down pretty substantially just in the last couple of days here, anticipating such a move. So I think, technically speaking, below 20,000 is where we started seeing a ton of buying come in across not just the whale wallets, but kind of retail wallets in particular. That's also, depending on which miner you look at, that tends to be kind of their average marginal cost of production. Below that, they start taking miners offline. That provides a bit of a bid. Does that mean lower prices are off the table? Absolutely not. There's a lot of people out there saying that depending on how bad the outlook looks for a potential Fed pivot, what Powell's comments look like on Friday, what the rest of the world looks like, 15,000 Bitcoin isn't off the table. But I do think 18,000, looks pretty reasonable for now in terms of a support.
So what's the state of altcoins right now? Bitcoin is down something like 12% in the past week, but you have altcoins like Cardano down 20%, Solana 22%. Are they more at risk in this downturn?
Absolutely. I mean, anytime you have risk appetite like this dry up, the altcoins are the first to suffer. And it's, they're just the small cap of the crypto space. So it makes sense. You layer on top of that, a lot of these kind of headline hacks that we've been reading about, some of these network outages at places like Solana disproportionately affect the altcoins. They're smaller, they're generally, not as decentralized or not necessarily as durable as Bitcoin or Ethereum. And so, risk off environment really impacts them.
So, turning to your outlook for the year, where do you see Bitcoin at the end of 2022? Is it still in this 20 to 30K range?
I would be surprised. Again, a lot of course hinges on the macro environment and kind of where the market's discounting, the Fed pivot or the timing of the Fed pivot, or if there even is a Fed pivot. But I'd be surprised if Bitcoin isn't at, closer to 30,000 by year end. One kind of thing we saw with the rally over the last couple of weeks was it was a different type of buying. It was generally kind of broader in conviction. It was the kind of buying that you like to see before the start of a long-term rally. Of course, macro concerns have pulled that down. And as a result, a lot of institutional investors, including ourselves, have ratcheted back to cash. But I'd be surprised if, as we start to chop through some of this wood going into the back half of the year, there's a little bit more clarity going into 2023. A risk rally could very easily push Bitcoin, up to or past 30,000 in my mind.
Okay, that's all for today, but we will be back again tomorrow, and we'll see you then.